So how should we read into our giving up the early gains and extending this decline?
Yeah, one way to read into giving up the early gains is seeing how the options are traded on the market. And so yesterday you saw about 4.5 times puts being sold versus calls. But that was in the front month contract. That was in January. And you saw more muted action in March. So you saw people positioning puts and calls about evenly then. And now the same thing was happening about this morning. About 1.5 times puts were being traded, but still muted out into March.
What about even further out, not just March, but do people start to make bets into May or the summer?
Yeah, so you're seeing people wanting the market to really digest itself when it's coming to Greece, when it's coming to corporate earnings. So people are positioning themselves. And one of the ways we're looking at positioning themselves, especially with the heightened volatility, you can actually go out there and get paid to go long the S&P 500. And one way of doing that is selling the 1850 SPX put in September for about $73. And then you can buy the 2100 strike call that goes out in September for about $64. So you'll get about $6 net credit. And that 2100 is actually where David Costin this morning sees the level being.
You were watching Bloomberg Television.
I was.
Kevin Kelly, nice work. So you profit if we continue to extend, but you're losing if we go down. This presumes that the Federal Reserve will stick with its plan to eventually start raising interest rates, normalizing its monetary policy by middle of this year. Is that the presumption here?
Yeah. So what you're seeing is actually in the one-year Treasury market, you're seeing yields being extremely low, around 21 basis points, but the Fed funds future market at the end of 2015 is showing about 66 basis points. So you're seeing the market actually anticipate a higher rise going into the year end.
Okay, got it. All right. In the meantime, one stock that we're watching, of course, is Verizon, because the company is said to have approached AOL about a potential takeover or some kind of joint venture. We're not sure what the format would be like, but certainly it must have some reverberations in the options market. How are people playing this? So
when you look at AOL, their volatility is still high. And after today, when the announcement came out, their implied volatility is around 47%, which is still really high. And you have to look back that there were chatters about Yahoo maybe doing a tie-up with AOL. They did a strategic deal a couple years ago by selling patents to Microsoft. AOL did. So you saw 2.5 times about the calls being traded, but you would expect to see more in a deal like this.
Okay. So, well, again, this is according to people familiar with the matter. It's certainly not confirmed by the companies, and we'll continue to monitor these headlines for any kind of announcement.